Good morning, everyone. Once again, this is Black Forest coming to you with another pre-market analysis video. This morning, we're going to be looking at the USDCAD, but before we get down to break down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you're here to find good, credible Forex content that can help you improve your ability as a trader and help put some more money in your pocket. So, with that being said, let's go ahead and break down this currency pair. So as we stated in previous videos that the USD has been one of our weaker currencies heading into this trading week. This is just due to the overall inflation that's been hanging over the American economy. No matter how good the economic news is for the USD, until that inflation is combated with economic policy on part of the American government, we're going to have an overall weak US dollar. Okay. But on the other hand, that we're going to have to watch the geopolitics of what's going on in the world because we have had incidences where throughout this European conflict between Russia and Ukraine, in which if it looks like it's going to spill over into a global conflict, that the USD has some signs of strength and acted as a non-traditional safe haven currency. Okay. Now the Canadian dollar has had some very good economic news come out over towards the latter part of the trading week last week, and it's starting to look like one of our stronger currencies heading into this trading week. We're going to still have to pay attention to that because also the Canadian dollar is what you call a panic currency. So anytime the global markets look like it can start to go into panic, it can be a sell-off on the CAD in which it will start to gain immediate weakness. Okay, and that can also be caused by geopolitical events related to the European war between Russia and Ukraine, looking like it could spill over into a global conflict. Okay, and then also too, we have to take into account that of the oil prices, because oil prices have a direct affinity to the Canadian dollar. So we also have to take into account the oil prices to see what's going on with oil, so we can be able to correlate that with the Canadian dollar accurately. Okay. With that being said, now let's get to breaking down this Forex pair. All right. So it looks as like we're staying within our range of 1.28888 and 1.26708. Looks like we're going to be bouncing between these price points. Every time we get to go in here, we're going to go up. And every time we get in this area here, we're going to be going down. That may be for this early latter part of the trading week, but what's more likely is going to happen as the CAD starts to pick up more strength and more momentum. We could possibly see a aggressive push down, start to range out into the lower part of the extreme, and actually start to break the extreme and head towards the downside. And that's going to be because USD is going to be much more stronger. That's going to be because the CAD is going to be much stronger than the USD. Okay. Now we could range out in the area here, or we could continue to do what we've been doing before. But due to how strong the Canadian dollar is, there's a very strong possibility that we're going to possibly just range out here, have an aggressive breakdown, range out here before we continue towards the short position. Now there is somewhat a possibility of price could push up, but that's just if it's just going to respect that its range as consolidation points. That's all. But the more likely scenario, what's going to happen is price is going to continue to push down, range out about here, have an aggressive push down, range out in this area before it continues to go towards the short position. And this is solely due to related to how strong the Canadian dollar is versus to how weak the US dollar is. Okay? Hope that information was helpful for you guys. Happy trading.